Hey everyone, if you're looking to buy a duplex, triplex, or even a fourplex in San Diego County, I wanted to go over some of the available financing options as either an owner-occupant or as an investor. Alright, let's get right to it. The first way is through conventional financing, and the borrower needs to provide 2 years of 1040 tax returns or business tax returns if they're self-employed, traditional income documentation, bank statements, and employment verification. The highest loan amount in San Diego County for a duplex using a conforming loan is $784,700 with a minimum 15% down payment as an owner-occupant. This means the maximum purchase price is $923,176, and your down payment will need to be $138,476. Again, $138,400. The maximum conventional loan amount for a 3 to 4 unit is $948,500 and $1,178,750 respectively. But these require a 25% down payment using a conventional loan. That's at least $316,000 if you bought it at the maximum conforming purchase price. If the purchase price is above $1,264,600, then you'll need to put more than 25% down. A good alternative may be to use a non-conforming loan where you only need 15% down as an owner-occupant. Now, if those two options are not as good or there are higher down payments than what you prefer, then this third option may be a big help. With an FHA loan, you can purchase a duplex, triplex, or fourplex with just 3.5% down. But you must live in one of the units for at least 6 months. This may be a far better option than conventional financing in terms of down payment. With FHA financing, you can buy a $775,000 duplex in San Diego County and put just $27,125 down. You can buy a triplex for $982,000 and need approximately $34,400 down. You can buy a fourplex for $1,221,000 with just $42,735 with just $42,735 down payment. That's pretty good compared to conventional financing where you're putting far over $100,000 down. Now, another option, option number 4, this is available only to active duty military personnel or eligible veterans with using the VA loan. And there's a lot of veterans down there in San Diego. I'm one of them, by the way. Eligible borrowers can buy a 2 to 4 unit with a 0 down payment using the same loan amounts we mentioned above in San Diego, but I want to stress again, it has to be your primary residence. But with VA loans, with those loan amounts, you can get in for 0 down. Option number 5, if you do not qualify using tax returns or your self-employment or that, we have a low documentation method that's available which requires only 12 to 24 months of bank statements, but no tax returns. With this method, you'll need a minimum 20% down payment up to $1 million as an owner-occupant. If you're buying it as an investment property, you can expect to put down at least 25 to 30%. The last option, number 6, if you do not qualify with your tax returns, traditional income documentation, or with 24 months bank statements, or your current income, but you are purchasing it as an investment property and you will not live there, there is still a program available. The one big condition is the current rents need to cover the proposed mortgage payment, including your taxes and insurance. Your job, your personal income, they're not disclosed on the application. This is a true low doc loan. Minimum credit scores on these low doc products, you're looking at least 660 to 680 middle FICO scores. On the other full documentation products, you can have as low as 620, but you'll still have other underwriting conditions to satisfy. If any one of these programs interests you, contact a mortgage specialist by visiting loanshoppers.net.